Welcome! Today we are diving deep into the tokenomics of Verasity, or VRA. We're going to use it as a case study to uncover a really crucial lesson about what truly drives a crypto asset's value. It's a factor that honestly a lot of people overlook, but it can absolutely make or break an investment.
So let's kick things off with a pretty fundamental question. In the wild world of crypto, what do you really pay attention to? Is it the exciting story, right? The grand vision, the super compelling narrative? Or is it the cold, hard numbers, the actual on-chain data? It's a question I want you to keep in the back of your mind as we go through this.
And that question brings us right to the core idea for today, and it's summed up perfectly by this quote from our source analysis. Track emissions, not just narratives. This is going to be our guiding principle here. We're about to explore why keeping an eye on the flow of new tokens hitting the market can sometimes tell you a much more immediate, much more real story than even the most exciting project roadmap.
All right, let's get right into the data. In this first section, we're going to look at what's been called a rising tide of VRA tokens, just to get a handle on what the current supply picture actually looks like.
Okay, so the first thing our analysis flags is this, just massive number, approximately 172 billion.
So, what is that? Well, according to the Coingecko data that our source cites, that's the current number of VRA tokens out there, in circulation. That's the total pool of tokens available for you, me, and everyone else to trade right now.
But here's where it gets really interesting. It's not just that big total number, it's the rate of change. The source material points to an addition of about 2 billion more tokens,
Entering circulation every single day. Let that sink in. This is not a one-time thing. It means that 172 billion we just saw, that's not a static figure at all. It's growing, and man, is it growing fast.
So, what's the effect of all this new supply hitting the market? Well, the analysis points to a pretty direct correlation. At the time this data was pulled, this constant flood of new tokens happened to coincide with a price drop of about 12%. This really highlights a critical economic concept that we absolutely need to unpack.
Okay, let's move to our next section and see how this all connects. We're going to talk about something called the dilution dilemma and get into exactly why this idea of supply pressure is so important to understand.
Let's just step back and think about basic economics for a second. What happens to the value of anything? I don't care if it's coffee beans, gold, or crypto tokens, when its supply suddenly starts increasing way faster than the demand for it.
And that question leads us directly to this key definition, supply pressure. It's really just a simple economic force. It's what can push the price of an asset down when its available supply starts to outpace the demand for it. You know, when there's more of something available, each individual unit becomes less scarce and potentially less valuable.
Here's another quote from the analysis that just hits the nail on the head. Dilution is not bullish by default. It's so easy to hear about token emissions or unlocks as just part of a project's normal schedule, but it is vital to remember that just adding more tokens to the market doesn't automatically mean the price is going to go up.
So it really comes down to this comparison. On one hand, you have a project with a fixed, totally capped supply. That creates scarcity, right? And that can support its value. But on the other hand, you have a project where the supply is rapidly increasing. Well, that can create constant downward pressure, and it requires a huge amount of new demand, new money, just to keep the price from falling.
So with that framework in mind, what could all this mean for the future? Let's move on and take a look at a projection that's based on the source's analysis. This is a pretty simple if-then scenario, a thought experiment. The source is basically asking the question, okay, if this rate of minting continues and the total supply grows from where it is now, around 172 billion tokens, all the way up to 200 billion tokens,
But what might that mean for the valuation? Now I have to stress, this is a projection from the source, not some definitive prediction, okay? But the analysis suggests a potential price drop to a tiny fraction of a cent. At that 200 billion token supply, this trajectory would point towards a market cap of just $1 to $2 million. It's a pretty stark illustration of how a growing supply can directly impact a project's valuation.
So after all that data, what is the big takeaway here? What's the main lesson? Well, it's all about learning to look past the hype and developing a simple framework for doing your own analysis.
And this gives us a really simple 3-step framework you can apply to any project out there. First, identify the current circulating supply. That's step 1. Then, and this is the really crucial part, track the emissions. How fast are new tokens being created? And from there, you can assess the potential supply pressure and make a much more informed judgment.
So let's just do a super quick recap of the key learnings here.
We've seen how these huge, large-scale token emissions can create some serious downward price pressure. It's a reminder that supply dynamics are an absolutely non-negotiable part of understanding any project's tokenomics. And ultimately, yeah, narratives are great for building a community, but it's the on-chain data that reveals the true underlying mechanics of its economy.
And that brings us right back to where we started, to that core message for today. It's simple, but it is so powerful. Track emissions, not just narratives. Make this your mantra when you're doing your research.
And so I'll leave you with this final thought. Take a hard look at the projects you're interested in, or maybe the assets you already hold, and ask yourself this question, honestly. Are you tracking the narrative, or are you tracking the numbers?